By June 2026, Wall Street is preparing for what could be the largest public offering on record, SpaceX. Elon Musk's space company is reportedly looking to raise $75 billion, placing its total valuation near $1.75 trillion. That sheer gravitational pull is moving the broader market. Smaller, publicly traded space companies have seen stock prices climb simply by orbiting the SpaceX listing. But we have to ask whether these secondary stocks are climbing because of actual aerospace demand, or if they are just riding a wave of irrational hype. To find out, we are going to run a stress test on two of the most prominent space stocks available right now, weighing the strongest bull and bear cases for each. You don't have to wait for SpaceX to buy into the orbital economy, but you do need to know how to separate actual signed contracts from the noise. Let's start with Rocket Lab, trading under the ticker symbol RKLB. They are the primary public alternative to SpaceX for building and launching hardware into orbit. Rocket Lab shows a steep 63.5% revenue acceleration year over year, hitting $200.3 million in the first quarter alone. The company recently signed 31 new launch contracts, doubling their backlog to $2.2 billion. That includes a $190 million order from the U.S. Department of War for 20 hypersonic test flights. However, this growth comes at an incredibly steep premium. With a market cap hovering around $75 billion, their price-to-sales ratio sits well over 100. To justify that valuation, the company needs its new medium-lift Neutron rocket to succeed. Right now, that key piece of hardware has yet to fly. Rocket Lab is carrying massive momentum, but the stock is priced for absolute perfection. A single launch pad delay or engineering setback could trigger a sharp drop in shares. Next is AST SpaceMobile. While Rocket Lab handles the launch, AST is building a space-based cellular network to connect directly to standard, unmodified smartphones. The bull case here centers on a major regulatory victory. In April, the FCC authorized commercial operations within the United States. This line graph maps out their technical and financial milestones. It tracks a successful in-orbit test hitting peak speeds of 98.9 megabits per second, overlaid against their $1.2 billion in contracted revenue commitments. But look closely at the current financials. Their total revenue for the first quarter was only $14.7 million. That is microscopic compared to their $27 billion market cap. There is also the unforgiving physical reality of operating in orbit. The recent total loss of their Bluebird 7 satellite proves exactly how fragile this infrastructure can be. AST SpaceMobile has cleared the regulatory hurdles, but their business is still in its infancy. A single lost satellite completely disrupts their deployment timeline and puts their entire valuation at risk. Both Rocket Lab and AST SpaceMobile share a similar profile. They are currently transitioning out of the research and development stage and trying to execute a fully scaled operational deployment. SpaceX's debut moves the industry deeper into the public markets. A listing of this magnitude means that every company in the sector, no matter how small, will now face the same level of institutional and retail scrutiny as any other major industrial player. The upside for these smaller companies is immense, but it comes with a shared existential threat. In the space sector, execution risk means battling the actual laws of physics. If you want exposure to this economy, you have to treat these as highly speculative plays. That means keeping position sizes small and anticipating sharp swings in either direction. A trillion-dollar offering will inevitably grab the headlines. But capturing real wealth up there means surviving the volatility of the pioneers down here.